Hey, good evening traders, and welcome back to the channel. Today we are going to look at Citigroup. Ticker symbol is C, and I want to show you what I'm seeing in the charts from both a bullish standpoint and, yes, a bullish standpoint. I think this one is going higher. I'm going to outline exactly why. Even though when you look at this chart, you see it and you're like, well, Josh, it's super extended. It went from $56 all the way up to $95, and it looks like it should be breaking back down, right? It needs to correct. Well, maybe, but here are the reasons I think it will not and will likely go higher before correcting. So let's first draw in the resistance lines as of late from these lows here and those highs there. So the first thing I want to draw your attention to is on the daily chart, we are obviously and confidently above the moving average ribbon, and we broke down through it, right? But look at the wicks, look at the price action. So it brought us right back inside it, went down through it, brought us back inside it. All of these have long wicks on the downside, which are essentially hammer candles, right? So that shows that there's massive buying pressure as it moves down lower, and we continue to set higher lows. So why do I think, despite this pattern, which is ascending wedge pattern, which typically do break down, why do I think this is going higher? Well, the first thing is I want to direct your attention to these red lines. Okay, these red lines represent pivot top highs going all the way back to, it appears, 2018, right? So we had this first one was a high, came down, got back up, sold through it, made another high, came back down, came back up, kissed it, sold down, came back up, overthrew it, went over this one, sold back down. So we had 1, 2, 3, 4 touches, a couple overthrows, and we formed, this kind of cup and handle pattern, right? So that's about 5 years of consolidation, okay? So you have all that consolidation. Now, if we look at the weekly chart, I want to show you where we are relative to history. So this stock at one point was $560. Why did it come down? And why is it where it's at now? Well, government, we had back in 2009, it had a bailout and it did a reverse split, right? Which took it down. I believe it was a 1 for 10. So it was, you had 10 shares, you got 1 in exchange. So that took us all the way down to about 30, I think where it happened may have been there, went down even lower. But you've essentially had you've had 10 years, I'm sorry, strike that, 15 years of consolidation, okay? And what did we just do? We just broke through these pivot top highs, these yearly pivot top highs. So when you put it in context, relative to history, looks pretty darn good, right? So let's go back to where we are today and why, again, I think we are going higher. Well, the first thing I want to show you that you just have to be mindful of is we do have higher highs on the price and higher lows on the RSI, which is bearish divergence. So you do have to be mindful of that. And if we do get a rejection prior to going higher, then this is how I see it playing out. Something like this, and then higher. But I don't think that's going to happen for all the reasons I just outlined. The fact that we broke out of this multi-year, 15-year consolidation. Now, it would make sense to backtest it, but I think we're going to go higher before we do that. So I like the pathing to be more like this. I think it's going to do this. I think we're going to come up, back down, back test, go higher, and then we're going to have the bigger correction. Because financials are on a tear. I think they are undervalued relative to their potential as crypto and blockchain gets adopted. And I think there's going to be a re-rating of financial companies that are going to give them higher multiples. So as that multiple expansion happens, I can see these prices going higher. So I really, really like Citigroup as one of them, JPM, another one, but this is my primary. And for these reasons and so many more, I do like Citigroup to go higher. But like I said, if we do get a pullback, and it wouldn't be shocking at all because we never really did back test this. We had kind of a back test kiss. So, you know, if we do something like this, you could see maybe something like this, boom, and then we go higher. But either way, you're getting in at a really good level at about $90, $95, depending on where you enter, with an opportunity to dollar cost average at these lows, which, you know, if you're a more conservative trader, you know, one way to play this would be, you know, 25% or 0.25% of your portfolio. So that's a 1/4 of 1% allocation at these levels. Then if we come down to this 83, 84 level, put another 0.75. That gives you a full 1% allocation or portfolio, which would give you a cost average probably right about here. So you would be so close in terms of your dollar cost average relative to current price. So that's obviously one way to play it. Or you could wait for this breakout here, you know, wait for the retrace and then be confident in that. So a couple different ways to play this. I'm already in it, and I allocated the same way I shared, 0.25%, and a 0.75 will be added here. So again, the reason you really have to look at it like that is as a swing trader, you really want to go into a trade knowing and potentially understanding that your initial entry will be wrong and you will have to maneuver in the trade. So you want to give yourself the ability to do that. So that's why, you know, you could start with a 0.25, 0.50, add a 0.25, 0.50, 0.75. Really just depends on your approach there. But those are the ways that I will be playing it, and yeah, I see this resolving to the upside. So if you like this video, please smash that like button, show some love for the channel, subscribe, tick that little bell, and be notified in real time as opportunities in the market present themselves. And opportunities exist daily, so make sure you tick that little bell and you'll be alerted as they are as they come out. And then also I'll remind everyone, nothing is financial advice. It's always educational and to share what I'm doing with my own trading portfolio. So again, thank you everyone for your time, and we'll see you on the next one.